Good day, everybody. Um, this is a video on using MetaTrader 5, the indices aspect. So I already spoke about the MetaTrader interface generally on the forex aspect. So there won't be too much in this video, but just the key stuff to note or the differences that set indices apart. So I'm going to be going straight to the indices, and please, every video you're watching, every app that you see that will definitely be useful for you, please ensure you download them. And these are the apps you get now, so because it is everything that eventually we'll be using. All right, so let's go to MetaTrader 5. All right, so I'm going to be using the demo account we opened. Yeah, so just click on it. If it is your real account, if it is your demo account, let me pause this video because network. So I'm going to all right, so it loaded successfully already, and you can see the okay. So I already made mention of the fact that in the indices market or synthetic indices market, it is just one broker we use. So this is a deriv account, and we trade indices on it. You get now. So where you click on quotes here and then you see currency pairs to trade in indices, you see or find indices there. You get now. So, and I also made mention of the fact that we have different types of indices. So let's see. We have you can see, sorry, that we have, look at them now. Volatility, we have volatility 10, volatility 100, different types of volatility. We have the step, which I made mention of in the voice note I sent. Boom 1000, crash 1000, boom 500, volatility, jump 10, step, as well as range break. You get. So that's like about 5 types, but under that 5 we have different types. You get different in the index. So I'm going to now be showing some stuffs on the chart. So these are the indices. I made mention of the fact that among the normal indices, like among the normal volatility indices, volatility 100 is the fastest, moves fastest. Depends on what is at the back that determines the speed at which it moves. Then for the 1x volatility, 300 1x, sorry, let me see. All right, so just take note that volatility 100 index among the normal indices is the fastest. You get now. While for the 25 1x and the likes, I can't really see the 1x part. These ones, sorry, the ones with the 1x index at the back, like for the volatility indices without anyone, the 100 is the fastest, while for the 1x, I haven't really checked it out and all of that. So we had the range break, jump 10 and the like. I already made mention of the fact that in every indices you get, like, indices is calculated by points. So in these indices now, what this means is that, like, this volatility then now that it is 6,765.70 points, that is actually 6,764 points. Volatility 100, which is 9,309 now, is actually 9,309 points. Like that, boom, 1,000, 12,899 points. So I told you that to calculate the pips, you divide it by 10. you get. So let's go into mention a few, and so you go to chart. Now this is the chart. If you want to actually how do I say it, you want to change the chart settings, you click on your screen, you go to settings, customize color. So maybe you want to change it color on white, maybe you want to change it grid, white, bar up, black, bar down, okay, bull candle, maybe white, bear candle, black. You can customize it as you like. So that's done. So you can see now that it's maybe clearer for those that don't like the black backgrounds. So you get now. So let's say this is okay. I'm coming. All right. So let's say okay. Let's say this was a trade in which you placed. Let's say you use 50% of this void here, and then maybe your stop loss was just below this point here. Just an arbitrary stuff, like no analysis was done, and you want to buy. You now bought to this imbalance here. You get now. So let's say you want to buy now. So this is our entry. Let me mark it with something, another color, black. Let me use another color, please. Blue. Then so you can see our entry is black. Sorry, our entry is the blue one, while our I'm coming on. All right, so our entry is the blue one, the blue line, and our stop loss is the red one, while the green line is our take profit. So we want to buy it. We want to buy this index at 6,697.66, and we want to set it at 6,686.313, while our take profit is 6,801.889. Right. So after we can see this now, so let's say, of course, I already told you that calculating your pips or this thing, you subtract. If it is your take profit, if that you want to buy, you subtract the take profit amount minus the entry. So you use that one. What you actually get is to calculate your lot size and your pips. Then if it is for the stop loss, you subtract the stop loss amount minus your entry. Simple as that. So of course, the first thing you want to calculate first is your risk, the amount you are willing to risk. You get the amount you are willing to risk. That's the first thing that you should calculate, not the amount you are going to make. So now our entry is 6,697.667, and our stop loss is 6,686.343. Subtracting this is going to give us like 6,697 minus 6,686 is what, 11 point something points, 11.324 points. To get the actual value, always include the decimal difference too. So for instance, now if it is 6,745.755 minus 6,731.120, you add the decimal to actually get the real amount you'll be losing. You get. So unless you want to leave room for the decimal when calculating your lot size, but to get the actual amount, you always subtract it with this thing. So all right, so now 6,697 minus 6,680 is 11 point. But it is not 11 points, 11 pips like that. It is just 11 points. To actually calculate the stop loss amount or stop loss pips, now you now do 11 divided by what? 10. So you get that is what? 1.1 pip. Why for the this thing they take profit? 6,821 minus 6,697 is what? That is 6,821 minus 6,697. That's 3 plus 100 plus 21. That is around 123. Yeah, 123 points, not pips. To convert it to points, to pips, 123 divided by 10, that is what? 12.3 pips. So your SL pips is 11 point and 1.1 pip, while your SL is 123 points but 12.3 pip. MT5 is calculated in pips, not points. So indices, that it is in points, you have to convert it to pips too, so as to determine your lot sizes and risk as well. Sure you get. Now you don't calculate it in points. So here now we're having a trade of reward 12, risk 1. That's like maybe 1:10 or 11, which is a very good trade. So we already know our stop loss amount is pips is 1.1. So we just go to place a trade. You go here, come here. So now the orders are the same, it doesn't change. The orders, the market execution, buy limit, sell limit, buy, just the same way it is applicable. It's the same way it is applicable here. So but the only thing that changes here is that in the volatility indices market, the least lot sizes you can use differs from the forex market. They have different ones based on their volatility. You get. Now in this place, now in volatility 10 index, the least lot size you can use is 0.30. That's the least lot size you can use. Of course, you know that in the volatility 10 indices, I told you that it doesn't move fast. Now we know that for our lot sizes, 0.1 is 0.1 lot size represents $1 per pip. 0.01 lot size represents $0.1 per pip. One lot size represents what? $1. $10 per pip. Now let's say you want to risk $10 on this trade, or let's say $11, because we have a this thing of 1.1 pip, and 1.1 pip times 10 is going to give us 11. So let's say we want to risk $11, so which means that we'll actually be using one lot size. Sure you get. Now one lot size, so it will now be one lot size times our one lot size is $10 per pip, and we have 1.1 pip, so that's 1.1 times 10, which is 11. Same thing, you calculate it with your, since our take profit is 12.3 or so, the 12.3 times 10, that is what? $123. So we'll be risking $11 to make $123. So you get. Now I said that the least lot size you can use here is 0.3, which means that we know that 0.3 represents $3 per pip. So you get. So on this particular trade, $3.3 times 1.1 is what? $3 times 1.1 is what? $3.3. That's the least amount you can risk on this trade. Shey you get now. If you don't have up to $3.3, you can still place the trade. The only thing is that, let's say you have $2 here now. You have $2 here now, which means that you have $2 in your account and you place this trade. The only thing is that if price $2 is, if price should get to maybe 0.3 times, what will you calculate? That should be like I think 0.75 this thing pip. So which means that you have just $2 in this account. They will place it for you. You get, but it means that before price drops by 11 points or it drops by 1.1 pips, they will close the trade if it should start going down. That means that, for instance, now if price should drop at maybe it's 7.5 points, because 3 times 0.75 I think it's $2, they will close, all your money, like that trade will be closed. So you get now. But the least amount you can risk to actually lose that it will get to that your 1.1 pips in which you set already is what will be what 3 times your pips stop loss pips amount, which is 1.1 in this case, and then that will be $3.3. So you get that. Price may just drop to maybe like 1 pip and then start moving in your direction, like go down a bit by 1 pip. So you get now. So that is why you need enough fund to actually fund your trade. So if it is that $3 that you want to risk or something, let it be that you have that amount. So you get, or you calculate these stuffs. So you get now. So in this case now, as me, you don't really have much. Maybe you are using a $10 account now, and the least amount you can risk is $3.3 based on this trade, which you already calculated. It means that you'll be making how much? 3.3 times that's 0.3 times. What was our take profit target? 12.3, which is what 3 times 12.3, that's $36. So you'll be losing $3.3 to make, or using $3.3 to make $36. That's that is fair. Using like 1.5 to make like this thing close to 20,000 naira. That's fair enough. So if it is your market order you want to place on this trade now, like you want to buy it immediately at the current market price, you can buy it. But because let's say price has not gotten to where you want to buy it now, set the buy limit order. Don't forget, buy limit. You want to buy it at the price below the current market price. So you get buy stop. You want to buy at the price higher than the current market price. Sell stop. You want to sell it at the price lower than the current market price. Sell limit. You want to sell at the price higher than the current market price. So let me go to another indices. Okay. So the same thing applicable to others. Let me check this one. So let's say you want to let's say you want to buy these days price don't necessarily get other blocks anymore. You get, so this will have been where I would have bought, because it's quite obvious now that price don't necessarily get to this thing again. So alright, so there's something I need to show you, because it will not be good of me to not show you guys. Okay, sorry, let me put it here. Alright, so I told you that all indices are different in terms of calculation. So let's see this one now. You want to buy it at Okay, let me use this place as first target. All right, so this one, let's say you want to buy it at 1.8870, and you want to, your stop loss is 8,657. Just subtract it. 8,870 minus 8,657 is what? I think that's 43 plus 170. That's like 43 plus 170. That's like 217 or so. All right, so that was 217, which means 217 divided by 10. That means the stop loss is 21.7 pips. Well, for the take profit, 11,054 minus 8,870 is what? That is 130 plus 2,000. That is 2,130. 2,130 divided by 10. That is what? 213. Which means your stop loss is 20.7 and your take profit is 213. That's like 1:10. That's fair enough. You get, that's very good. So, but this is it now. Let's now go back to trade it. So look at this one now. The least lot size you can use on volatility 100 index is $0.2 per pip. That the least lot size is 0.2, which means that the least pip amount of value is $2 per pip. Shall you get now? Which means for your 20.7 stop loss amount, it means that your risk is, the least you can risk on that trade is 20.7 times 2. That was $40. Shall you get now? They will open the trade if you don't have that up to that amount in your thing. But the thing is, let's say you have $20 in your account and price drop by 10 pips. That's like 100 points. It means they are going to close that trade for you. So it will be like a risk if you are placing a trade and you don't have up to that amount that you are using to want to trade it. I told you already that volatility 100 index is the one that moves so fast. Shall you get now? So, but let's say you place the trade. So which means on this one now, $0.2 lot size is $2 per pip. So which means on that your 213, you'll be making $400. Shall you get which $400? $426, and then you'll be losing this thing just $20. Sorry, just $40 on that trade. Shall you get now? Just in a day or two, you get, because the market moves fast. So same way in which, so it will just be, let's say buy limit, maybe same process, everything 8,000. Let me just, I've forgotten the values. 8,000. Okay, let me check. 8,870. okay, it will just be buy limit, sorry, 8,870, 8,657, 11,054. All right. Sorry, I wanted to use the least lot size. So buy limit 8,870, 8,657, TP 8,000, no, 11,054. So you can see now, you can see this trade here now. You can see we already placed it already. You can see how tight the stop loss is. The only thing is the lot size. So you have to calculate everything. Know how much you're going to be losing. Know how much you're going to be risking. Know if you can trade that particular coin, indices or market. Share you get now. That is why it is important you learn how to do it yourself. I can provide you setups, but you still need to understand how to manage trades yourself. That is the major thing. So now let's go to another one. I'll be really fast because I don't want the video to be too long. So volatility 25 index. So this is quite different from the ones I've been saying since. Okay, I want to use sell this time around. Don't know if I can. Okay, so let's say here now. Coming. I told you price don't necessarily get to other blocks again. Of course, when there are so many SMC traders now don't spoil market for us, but that one doesn't stop us. So you can make this like 50%. Sorry, I don't want to use that one. I want to use the other side. All right, so here now, so this can be just the 30. You can put it in the 38.2 as a part here, or 23 between 38.2 and 23.6. So you get. So let me delete it. So here now, I already put it in 38.2, and I want to maybe sell. My stop loss is right above this point here, or best still, I can see an imbalance here. An imbalance work well on the indices market, so I can just put it at this end because there's a double imbalance here, or just slightly at this point here. It gets so, and then my stop loss is here. See, it gets now, and my take profit is at probably this first point here. This is a daily time frame. Of course, you're going to refine your entries. If you are now online to refine your entries, where you use confirmation entries, your stop loss will not be more than maybe 50 pips or some. You get, it may not even be more than 100 pips. Share you get. So if you are online to confirm the trades, share you get. So we want to sell at this point here at 414,831, and our stop loss, because it's not a confirmation edge, maybe will not be around, is 420,187. Our take profit is 382,697. So here now our stop loss is what? 420,187 minus 414,831 is 6,000 points. My divided by 10 is what? 600 pips. For the take profit, 414,831 minus 382,697. That's 14,000 plus 18,000. That's 32,000. That's 32,000, which is what? 303,200 pips just in few days. Check you get now. 32,000 pips. That's really fair enough. So that is that on that. So going to the this thing now, to the chart now, we know our stop losses. Don't forget the this thing. So look at here now. I already told you how you need to cross check the lot size these brokers give you. Look at now, they put the 0.2 lot size here already. Don't forget, we know that 0.2 lot size is $2 per pip, and we're having $600 600 pip this thing stop loss. If you should use this, it means that 0.2 times 600 is $2 times 600, that's $1,200, and you're having maybe $100, $50 in your account. So you have to go to the least lot size first. Let me show you the least lot size here. The least lot size on volatility 25 index is what? 0.005, which is even lesser than the 0.01 least lot size in the forex market, which is half of that. So it means that in this case now, you know that 0.01 lot size is $0.1 per pip, but in this case now 0.005 lot size is what? 0.05 pip, dollar per pip. I don't know if you guys understand me. 0.01 lot size is $0.1 per pip. Half of it is what? 0.05, and we are having 0.005 this thing lot size there, which means that for this lot size, for every pip moved, it will be $0.05 per pip, and we are having 600 stop loss, which means that 600 times 0.05 is what? That is $30. So you'll be risking $30 on this trade. Then our TP is what? 3,200 times 0.05. That is 600 times. That is 30 times 5. That was $150. She gets now. That is $150. That is $150 on take profit amount. She gets now. So this one now you need to be careful. So if I use 0.01, it means $0.1 per pip. $0.1 times 60 times 600 is what? 60. But I will not be making more. It will not be 0.1 times 3,200. That's what? $320. If I use 0.5 on this trade, that will be what? 0.5. That's $5 per pip times 600. That means you'll be risking $6,000. She gets now. Oh, sorry, $3,000. But you'll be making more. Of course, $5 times 3,200 is what? You know the amount. But always check and calculate your stop loss value. The same thing is applicable to all others. Range break. Let me go to the charts. Oh god. Okay. The same thing is applicable to the charts. You get everything. You divide it by, you get your entry, your SL amount, divide it by 10 to get your pips. Check the this thing. Okay, let me be checking the list lot sizes for you. This one now, the list lot size is 0.01. Step index now. Sorry. Step index now. The list lot size is 0.1, which is $1 per pip. Let's move to another one. Okay. Volatility 75. Okay, I must make mention of this one. Okay. Okay, let me just volatility 75 now. It is the least lot is 0.001, even lower than the 25, the volatility 25x 1x index. So you get, which means that for this one now, if you are using 0.001 lot size, it means you'll be losing it is rated as 0.01 lot size per PM dollar per pip. So it will not be what? For let's say that $6,600 pip trade. It means that it will be 600 times 0.01, which is like about $6, and then you be gaining 6 times 5, you be gaining $30. You get it now. So if you increase, so let's say you want to raise maybe $12 now, it will be what, 0.002. You get now. That is just it. But all of them have a benchmark of the least lot size you can use, so you need to calculate it first hand. You get now. Please, this one may be seeming like somehow, but it's something that you can make so much from, and there is opportunities in the sense that even if you have $1 save or $3, there are some this thing you can, especially when you get confirmation entries. Sometimes I don't even, my price will just touch the point, my buy price, and it does not even come down at all, maybe to sell at all. When I use confirmation entries is like, I don't know how to describe, but like, how would I say it? Much more probable entries. You get, so confirmation entries is like, okay, let's say you have a stop loss, and price has already gone down a bit in that stop loss. Before it gets to the stop loss, then it goes up again, comes down again, it now touches your entry, going picks your entry. It gets now. So imagine, it may just be like maybe 100 pips stop loss, or maybe like 50 pips, or even less, maybe 30 pips stop loss, which means that on 30 pips stop loss, I can just place a trade on, I can use 0.1 lot size. Although I don't take those kind of risks, I try as much as possible to manage my risk, because I know I see opportunities here every day, or almost every day. So that's something to actually take note of. So, and then, well, there's nothing much on that. That's just the basic thing. So well, that is that. Which other thing? There's no news here. I told you it is open 24 hours a day. There's no news. 24 hours a day, 365 days a month, a year. So no news here. You just trade and enjoy yourself. So